Ethical investing can be a complete scam. So how do you make sure it doesn't fool you? Well, you need to carefully consider the factors that I'm going to go through today. Otherwise, you could be paying more for your investments and making literally zero difference in the world. But don't worry. It's not all doom and gloom. I will also tell you how you can make sure that the companies that you invest in are ethical at the end of the video. But the best way to secure your investing future is to like and subscribe to this YouTube channel. It's free and you get financial education with just the click of a button. Now, time is money and I don't plan on wasting yours. So let's get into it. I absolutely support the principle behind ethical investing. I currently work in a job that's trying to bring more renewable energy into the grid. A cleaner, cheaper, greener energy future will be better for this generation and the next generation. And I also believe the world should have a moral and ethical compass. We are all put on this earth to take care of it and each other. That's why when I first heard of ESG investing, I thought, hey, that's not such a bad idea. But then I looked deeper into it and I fell down a rabbit hole of understanding what was really going on and how it couldn't really deliver the promises that it was making. Okay, but first, let's define this bad boy. ESG investing stands for environmental, social, and governance. The environmental criteria looks at how a company is affecting the nature and environment. The social criteria examines how a company manages its relationships with employees, suppliers, customers, and the community where it operates. Governance is looking at the leadership qualities of the company, executive pay, auditing, internal control, and shareholders' rights. ESG investing is aiming to raise investors' and companies' awareness of those different issues and how they can progress towards sustainability. Sustainability has become a really hot topic as of late, and ESG investing seems like Wall Street creating a product that's sugarcoating what's really going on behind the scenes. You have to remember, these are investment banks creating these products. You have to really consider, are they just creating ESG investing to capitalize on your goodwill, trying to make a difference in the world, and at the same time counteracting all the wrong things that these companies have done in the past? If Wall Street and these different companies really cared about ESG, surely an ESG marking isn't the way to do it. They should be making decisions that lead to actionable change towards a better future. But am I just being a cynical, grumpy Australian? Well, not quite. And the first reason goes down to how the stock market actually works. And that is, it's a secondary market. So one of the major problems with ethical investing is that shares are traded on a secondary market, not a primary market. But what does this all mean? Well, basically, you're not supporting a company when you purchase its shares. Contrary to what a lot of people might think, is that when you're buying shares, all you're doing is buying shares of someone else, and all that happens is they receive cash when you buy the share. If that's a little bit confusing, then don't worry. Think of it as buying a used car. You're not supporting Holden or Ford if you're American. When you buy your neighbor's secondhand Ford or Holden car, those two companies don't get any money in that transaction. Only your neighbor does. This is the same with buying shares in Ford or the shares of any other company. So the idea that you're supporting a fossil fuel company by owning shares in them doesn't really make sense. Whether you or someone else owns those shares makes no difference to the entire world or to the world's demand for fossil fuels. All you're really doing when you don't buy shares of a fossil fuel company is removing yourself from the ability to capture the profits of that company. Instead, you're giving the opportunity to someone else. If making money from fossil fuel companies doesn't really sit well with you, I understand. But what you have to understand is there's a difference between making money in the stock market and supporting a fossil fuel company. Buying shares in a fossil fuel company, all you're doing is making money from them, not supporting them. But look, if you still don't want to make those profits, then don't worry. You can pick a company that is ethical or ETFs that invest in ethical companies. But you're not really making a difference to the world by doing this. Is this all sounding a little bit grim? Well, I'm sorry, but it actually gets worse. Even if you buy an ethical ETF or an ESG company, guess what? Some of them aren't even ethical, and they're doing it for the wrong reasons. Now, this is a really huge issue because even big tobacco companies and oil companies are claiming to be ESG. Altria was one of these examples. This is one of the biggest tobacco companies. And guess what it also sells? Wine, weed, and Juul. And guess what? They're claiming to be an ESG company, despite selling things that harm the environment and people. And then it gets worse. Consider Apple, another ESG company. But one of the criteria for ESG is social. And this is looking at how companies manage their relationship with suppliers. Well, Apple is known for squeezing out profits from suppliers and treating them pretty badly. Why do they do this? Because they're dominant in the industry and businesses rely on them. For example, think about the Fortnite and Apple Store battle.
Get ready for the next battle.
And of course, this isn't a big deal from a business perspective. It's normal for a business to try and make more profit. That makes the company grow and help shareholders. But when you're looking at it from an ESG lens, claiming to be corporately social responsible is really a bit misleading if they're engaging in these practices. And I'm not alone in this view. The man, the myth, the legend, Shamath has actually made some really good points on this as well. He balances the argument a little bit and says, this ESG movement has made some companies look inward and figure out what practices do they need to improve. But it hasn't really done enough to encourage best practice. And it hasn't made any significant movements to solving something like the climate change crisis. For example, a really big issue is the way companies can use ESG marketing to get free money. Sounds crazy? Well, it's not. Shamath has said, if a company claims that they are ESG in Europe, they can basically borrow from the central bank for negative interest rates. I wish I could get negative interest rates for claiming I'm environmental. I recycle. And the worst part is, companies don't even have to do much. All they need to do is announce initiatives that are going to help them with their ESG labeling. They don't even really have to complete these initiatives, and how successful these initiatives are doesn't really matter to the central bank. And so that's just individual companies. But the structure of ethical ETFs is a little bit unethical as well. A famous financial firm, MSCI, introduced an index called the ESG Index, which basically tracks all the ESG companies. But this allowed different investment firms like BlackRock and Morgan Stanley to make an ETF that tracks that index. The ETF then gets listed on the stock market, and investors like you and I, well, we go and invest in that stock. And that doesn't sound too bad, but guess what? BlackRock and Morgan Stanley, well, they get to charge you an annual commission for basically doing nothing. And who's at risk? Us as investors. According to a recent research report, at the beginning of 2018, investors held just over $11 trillion in assets chosen according to the ESG criteria. And this is growing at an alarming rate. I should say here that there definitely are some companies who are trying to go the extra mile and actually be ESG. I'll give you the tools to find those different companies at the end of this video. But when it comes to ETFs who track these ESG companies, they can be kind of lazy. And the structure of these ETFs are pretty unethical as well. So if the ESG criteria doesn't really make companies that much more ethical, but what kind of performance do these ESG companies have? And can you make profit from them? Well, according to Chris Dommer. Who's Chris Dommer? Chris Dommer is the Director of Corporate Engagement at Morningstar. Pretty credible stock company. And they said, past research has actually shown that ESG integration has a positive effect on a company's financial performance. But stocks with a low ESG rating usually perform slightly better in weak markets or moments of crisis. According to the Responsible Investment Benchmark report in Australia, ESG companies actually outperform the average large cap companies over 3, 5, and 10-year price period. International ESG companies have also outperformed other international funds over a 1 and 3 year time period and matched them at a 10-year period. That sounds great, Jordan. Well, kind of. First, as we kind of just spoke about, because the ESG rules aren't really that strong, most of the companies you're investing in aren't that ethical anyway. But second, and maybe more importantly, is the fees. Most ethical funds charge you more fees than you would with a standard fund. This is because they're usually smaller scale, but also because there's an increasing demand from investors for them. They basically know they can charge you more because you'll pay for it. This is more strongly the case with an ETF. And these higher fees, well, it goes without saying, they're going to erode your returns significantly. So the important takeaway here is ESG companies can perform at the same rate or better than non-ESG companies, but the fees associated with them can kind of just bring them down in line or even go worse than non-ESG companies. Okay, so obviously I've outlined a few risks with investing in ethical companies, but how can you make sure they're ethical and how can you put your money to best ethical use? Let's get into that. A simple way to make sure your money is invested ethically is to switch to an ethical bank. You can look this up pretty easily on Google, but if you've decided,
no, Jordan, I really still want to invest in ESG stocks,
and you make that decision knowing that it's a secondary market, that's all good. I'm not going to be a stickler, you do you. But if you really are serious about finding ethical companies, it's going to take a little bit of work. What do you need to do? Well, there's 5 things. First, monitor the fund or the company to ensure that standards are maintained. This could involve looking through their annual audit reports, which you should probably be doing anyway, and or contacting a regulatory body. For example, in Australia, that's ASIC, and in America, it's the US Securities and Exchange Commission. Second, you need to stay updated on reported breaches of ethical standards, monitoring the news, and reading more than just the headlines. Another way to stay informed is to like and subscribe to this YouTube channel. Third, you'll need to understand how a company treats its employees and why. This can be looking at different independent sites that report on the corporate culture rating. For example, Glassdoor. Fourth, you'll need to assess the environmental, social, and corporate governance score, the ESG score. And finally, you'll have to watch out for buzzwords. For example, some clean companies use the term carbon net zero. This is very different to carbon neutral. Ethical investing is a bit of a scam. It sounds great on paper, but in reality, well, you're really just getting charged more fees for an ethical portfolio. And at the end of the day, it's not going to make a big difference to the world that we live in. However, it might help you sleep at night. And look, if it does, hopefully this video hasn't ruined that for you. At least now you know that the stock market is a secondary market, which means your money isn't going directly to a company. So it doesn't matter if it's an ethical company or not. And now you also know that the ESG claims are often used as a marketing tool. And a lot of ethical companies aren't so ethical. So you have to make sure you do your research before investing in any ethical companies with the 5 things that I spoke about today. If you do find an ethical company or an ethical ETF, be careful of those pesky fees because they're going to eat into your returns. And look, at the very least, be proud of yourself for even wanting to invest ethically. At least you want a better world. If you want to find 4 of the best ETFs that I think you should invest in right now, link up top. If you also want to learn about how to invest to retire early with stocks and ETFs, link up top as well. That video goes into the market risks and the singular asset risks of investing in stocks. But next step, invest in researching ethical companies to make the right decision. Check out another video here, or here. And I'll see you again soon. When you buy your neighbor's secondhand Ford on